Hey guys, my name is Arjit and welcome to a session with QuantGnosis Diary. In the previous video of the technical analysis series, we learned about basic support resistances and we understood what are trends and what are the breakout from the trend. In this video, we are going to learn about Fibonacci retracement. If you have not watched the previous basic video about support and resistance, please do check out support and resistance video before proceeding further into this video. So before understanding the Fibonacci in the stock market, we'll learn what are the Fibonacci actually are. So in mathematics, the number sequence of this number 0, 1, 1, 2, 3, 5, 8, 13, 21. So these numbers are all called Fibonacci sequence numbers. So every time the third number comes from the sum of previous two numbers. So 0 plus 1 gives you 1, 1 plus 1 gives you 2, 2 plus 3 it gives you 5, 3 plus 5 gives you 8, 8 plus 5 gives you 13 and 13 plus 8 gives you 21. In this sequence of the numbers, if you take a ratio based on immediate two numbers, so which is basically means starting from approximately 5 by 3 or 8 by 5 or 13 by 8, so these numbers gives you a same unique number which is 1.618034 every time. So ratio of two numbers, it gives you this particular number, and this number is called golden ratio, or it's denoted by the Greek symbol phi. So before using this sequence or the ratio, we'll calculate some more ratios. So if you do calculation based on the immediate two number with the smaller number at the top and the bigger number at the bottom, which is basically 3 by 5, 5 by 8, 8 by 13 and then 13 by 21, in that way you will get a ratio called 0.618. If you calculate a ratio based on skipping one number in the middle, which is basically, so if it's 2, 3, 5, we'll be calculating 2 by 5 or 3 by 8 or 5 by 13, then we'll get a number called 0.382. This is another unique ratio number. Similarly, if you calculate by skipping two numbers in the sequence and calculate 3 by 13, 5 by 21, this way until the infinite number, all the ratios will be coming to 0.236. Now based on these three ratio numbers 0.618, 0.382, 0.236, these ratios number we can derive further more ratios using the square root method ratio, the simple ratio, or the subtractions from the limit. So all these numbers 0.786, 0.88, 1.27, 1.41, all these unique numbers can be derived using these ratios. Those who are already familiar with the Fibonacci using in a technical analysis tool, you know that there is also 0, 0.51 which are actually not part of the Fibonacci ratios, but it's used for a standard 0 for the 0 and 1 for start and end, and 0.5 is the middle way of between the start and end, but these are not part of the Fibonacci ratios. Now if the Fibonacci sequence is plotted in a geometrical manner, it's formed something called golden spiral. So if you just go to the Google and you will find something called geometrical golden spiral images. So I'll just Google this and I'll find something like this. So the spiraling pattern with the square boxes inside, if you see this following exactly the number of or the Fibonacci sequence number 3, 5, 3, 5, 8 and then 13, 21. So the bigger it gets, it follows infinitely make a spiral and in the Fibonacci sequence numbers. So this golden spiral is actually very common and is visible in different form of it's visible in the art. If you search for art or the nature images, or even some of the things in the science also follows this particular pattern of golden spiral. So golden spiral, that's why it could be like a pattern of the universe. So even the pyramids and even in art or flowers or DNA structure, all these things you may find these patterns. So that's all fascinating in mathematical term, but what's the use of all this? So we are not actually going to use the spiral itself. We are actually going to use these ratios 0.618, 0.382, 0.236 together with these three numbers, and these numbers we can use. And some of the standard, if you can use also in 100% measurement, which is basically 0 and 100 and 50%, 0%, 100%, 50%. In that tool it will be 61.8%, 38.2%, and 23.6%. so for the simplicity purpose I will be using the point scale of this, which is basically 0 to 1 instead of percentage. So jumping into the stock market itself, for the use of Fibonacci, we use the Fibonacci as part of doing analysis in chart and draw the particular levels to get approximate support or resistance levels. So to use the support drawing tool, before using details of the drawing tools, some of the points to remember that if we use a higher time frame chart, that will have a better chance of success than lower time frame chart. And if we're using a extreme top and extreme bottom levels, so those levels will be more reliable than the one which are inside. But that does not stop us to use it. If we can go and use the structural top and bottoms as a start and end, which is basically 0 and 1, and get the other levels based on that. Okay, so let's directly go and jump into a chart in the trading view. Okay, so I'll just delete this chart. So right now I have a daily time frame chart for Nasdaq or the US 100, the tech index. It's opened here, and I'm going to use the Fibonacci tool in this drawing and see how does this pans out. Okay, so for this, so before going in drawing into this, I'm going to use mainly Fibonacci retracement tool, but there are some other Fibonacci tools that you can explore if you like. Some of these tools are Fibonacci arcs. So Fibonacci arcs basically half circle that extend outward from a line connecting a high and low called the baseline. So it's similar to the trend line, and these are intersect the baseline at the 0.236, 0.388, 0.5 and 0.618, the numbers that we have discussed here, in that manner. So, and those gives us a support resistance level. Okay, so before going to retracement, I'll check, you will use for the main purpose of this video. Let's check the arc. Where is this arc? So this is one arc I can get. So if you see this from here, if I draw till here, okay, so this is top and bottom I drawn, and this is half circle all the form, right, in the calculation of Fibonacci ratios. And in this half circle are intersecting this line, okay, in this 0.23, 0.38, 0.5. So these levels I can use as my support or resistance level. So if you notice this 0.61 here, price found a resistance after hitting around this level, and then it took support around this level. So this went to a important level, or the intersections of this point. Okay, if you see, these are respecting these levels. You can also go ahead draw in this manner also. So this is the baseline, and these are the half circle which are intersecting the baseline in different levels. So I can get the levels around here. Okay, so this way I can get a support or resistance level using one of the Fibonacci tool called Fibonacci arc. There is also something called Fibonacci fans. So in Fibonacci fans, lines are displayed by drawing a trend line between two extreme points. Then the 90-degree invisible lines are drawn to the trend line, which gives in the Fibonacci ratio manner and gives us a different price level. So if I come to my drawing tool and check for fan, here I'm getting a speed resistance fan. So if I draw from extreme bottom to extreme top, if you see these are different trend line are automatically projected by this drawing tool. And if you see this 0.382, this trend line, this is taking a support around here right now, and previously it was trying to give a support around 0.236. Okay, and then these are the vertical lines which are basically intersecting at different point of the this trend line. So this is one level which is First time it took support slightly above this, and then second time if you see, this is the second level which is intersection coming in the future, and maybe I can draw a third level which can be an intersections of vertical levels. Okay, so that way I can use this Fibonacci fan to get my support and resistance level. There is a one more tool called, which is basically time zones, Fibonacci time zones, which is a slightly different, because so far we have seen we are getting the prices in the chart, but instead of prices, time zone gives you the time, so which is basically x-axis, right? So this horizontal axis, it gives you time and the when there could be a possible change in momentum and change in price based on the Fibonacci sequence number. So if you just use the Fibonacci time zone drawing tools and draw it horizontally between the extreme top and bottom, if you see this, these are the certain time frame that it's plotting automatically in the future, and these are plotted as per the Fibonacci sequence number 1, 2, 3, 5, 8, like that. So it's expected that price may find a different momentum, or it may give a pause in the momentum and change a direction. It's possible in the future of that time. So which is a debatable point of view basically at this point to predict a future. But however, this is one of the Fibonacci tool that you can use. But if you see in this trading view, in this drawing tool sections, you can see there are other things like Fibonacci channel, Fibonacci wedge, Fibonacci spiral. So this is like the same thing as golden spiral. So these are the also drawing tools that are available here, and we can go and use it. So go ahead and explore these tools that are here and find out for the different purpose. Now coming back to the main topic of this session is the Fibonacci retracement. We'll use this tool called Fibonacci retracement from the start, and then I'll calculate from this previous top and then this bottom. So if I calculate, it's if you see 0 and 1, I just plotted, and based on that it's automatically giving me some levels, right? 9740 is the 1, and then 0 is the 6636. You see 0.23, 0.38, 0.5, these levels, and even after that I'm getting 1.27, 1.41, 1.61, 2, 2.414, like that it's going on. So if you go in the trading view, if you're using trading view for your analysis, you can go to settings and find out which are the level that you want to enable to have your clear view. So if I want, I can just disable 2 or hide 2 and look only the other levels. Okay, for example, so I'm getting some levels. Now what's the purpose of these levels, right? So previously I mentioned that Fibonacci levels can be used for the support and resistances. Okay, but what will be the practical application of support and resistances in the view of Fibonacci? So the retracement of term, the word retracement in the Fibonacci retracement basically denotes retracement or pullback, which means we know that in a trend price does not move in one direction, and after moving up for some time it comes back a little and then start moving again, and then it comes back a little, like that it continues. So for pullback trading or retracement trading, we can anticipate a level beforehand using the Fibonacci tool, that where it can come back to before heading to the towards the next level. So if you see this price has come to this level and then it pull back to the this previous Fibonacci level, if you have bought, if you have anticipated and bought here, you can continue further into this trend and use it for your trading. So this is one usage that you can do pullback trading, anticipate a level where it come and it will maybe reverse. If you see right now, price has been taking support from 1.27 to around here, and it started forming green candle. It's a possibility that price may continue to the next level around here, 1.618. So that's one implication and usage, using a pullback and getting a support resistance for your planning your trades. Another one is extension estimation. So what is extension estimation? At this point when the price was here, you know that price has tested the previous high, but you don't know what is the next level from above this, which level it can come to. because there is no market structure to give you demand and supply zone, drawing a demand and supply zone. So you cannot draw a demand supply zone if it's the structure is not formed yet. So we can use that 0 to 1 this tool, and it gives me extended level above the extreme top or extreme bottom is 1.272, 1.414, 1.618, like that. It gives me the next possible resistance level, despite I don't have a chart structure where I can indicate where can the next supply zone or can occur. So that's another usage. And then there's a trend and reversal levels. So trend is basically you're doing for in the direction of trading, you know that you will need to book profit at the resistance, so you know that there, or if your coming price is coming down, it's coming to the support, you can go for reversal long there in the support. So that's some of the choices that you can have based on the support and resistances levels. So we discussed more about support resistance in the previous video, so do check out that. Now the other uses are a little bit advanced, and then the different type of pattern that is there in some of the harmonic theory or the wave theory. So those who are already familiar with, if you see here, you can draw the XABCD pattern, ABCD pattern. These patterns in harmonic gives you a potential reversible level, which these harmonic patterns are basically derived from the Fibonacci ratio that we spoke about earlier, and it's a little bit advanced derived version of that Fibonacci ratio. Even if you see those who are familiar with the wave theory, the calculation of the leg inside the wave theory, like 1 2 3 4 5, so these you calculate. So these are calculation based on happen with the measurement from the Fibonacci logic. So these are the some of the application of Fibonacci levels that you can do to convert your analysis to a more of a tradable levels for support, resistance, and taking trades based on them. Now coming back to the retracement here again, if we see here, I have just drawn this level, and let's say I have taken a trade here, and thus when it's coming back support again here, and then I am targeting that 1.27 level to be my target, or 1.41 to be my target based on my Fibonacci retracement drawing. But when you are going directly into applying your actual money in the market, some of the limitation that you should be aware of before deploying our real money. So two important limitation that we'll need to remember when using technical analysis, not just Fibonacci, it could be also be applicable similar to technical analysis of any other form of technical analysis. It will be that the bias and the uncertainty. So what is bias? Basically based on the person who is drawing the Fibonacci level, the decisions of using the top and bottom could be different, and hence the level can also be different. So in this case I have drawn the 0 to 1 here and found this 1.41 level and 1.61 level, those are possible levels. But if the person says that in here I don't see prices taking any resistance and price actually made a top around here, so the number I actually want to modify this to this level instead. So depending on which level I choose, if you see this, so depending on the level I choose here or here, the level gets changed, and if you see that 1.61 comes around here and 1.414 come around here. Now if you see this 1.61 here is giving you resistance, and then price came down sharply below from this particular level around. But if we see 1.414 is not respected that bigly while going up. Now if I go back to drawing this again, and if I see it, this 1.414 giving a resistance, while 1.61 is level is not giving me the resistance. So depending on the person who is drawing their choices of top 0 and 1, the levels will be different. So you need to remember that very carefully. Second thing is the uncertainty factor. So those who are familiar with the Heisenberg's uncertainty principle in physics, which basically talks about uncertainty of variables in particles, that will always be there. In layman's terms, this is basically a simple philosophy that you can never be absolutely sure. Everything is somewhat uncertain at any point of time. So that's like basic philosophy. However, this philosophy is very much applied to technical analysis. So you can never be sure that this is the level that will be taking support, or this is the level it will be giving you resistance. So you need to remember the uncertainty factor of the technical analysis in case of when you are using the Fibonacci levels as well. So now you must be thinking, if I know that there's uncertainty, then why I will use it? Or if there is a subjective bias, so if I draw it something and my level is not correct, somebody else's level is correct, then what's the real use of this? Now answer to that question is the confluence. So Fibonacci, like many other technical tool, are supposed to be used together with another technical analysis form. So let's say I'll go back to this chart again, and now I'll do what? I'll enable my 50-day moving average here, and I'll see price where the moving average and the price has been intersecting, so confluencing. So these are the particular levels. If you see this level, so this level or this level or around here and here, if you see the price and the levels are intersecting around it, so these are the important places of support and resistance. So together with moving average I am using here, right? So I can also use, I can draw a trend line and see whether the trend line is intersecting with any of the Fibonacci level, and that level will be important for me. So this is the trend line where it intersected with the Fibonacci, or this is the level which intersected. So these are the level I'll be taking as important level. So use it as a confluence, and then you can get a support and resistance level for the levels which are actually important. So on the next part, so you are going to use the Fibonacci in real life by using a Fibonacci level together with another form of technical analysis. So that's the bottom line. Okay, now before we wrap up, so far what we have learned what are the Fibonacci numbers and how the golden ratio is calculated, and then how about the Fibonacci ratios that are used for the stock market technical analysis are calculated. Then we know that this is very useful tool using Fibonacci retracement or Fibonacci arcs or fans. These kind of tools we can use to get the levels of the time, levels of the price or the time we can get for our future approximation or estimations. Also, we have learned to apply the Fibonacci retracement to get a different trade ideas, like where to stop for the next target, or where I can go for entry, or how some of the advanced level we can go for where price can stop and start moving again. And we have also learned about the limitations of the Fibonacci and in technical analysis in general, and how to avoid them by using the confluence. But at the final note, you need to remember you will need to practice before applying this strategy with the real money. So you can either go for paper trading, or you can backtest your strategy before making an entry stop loss based on the Fibonacci levels, and then use the real money to practice further. So the more you practice, it will be more handy to you, and you will understand in much more depth in practical rather than just theory. Okay, so that will be all, and do please like and subscribe, or feel free to comment, and do check out the other videos also. Take care.